Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the gold market. So the week just has started, but markets already starts to bring in us surprises. I have not known whether they're pleasant surprises or not quite pleasant. It's depending on your view on the market. But as we already talked today on the euro currency, so although we have valid bearish setup and actually we were building the plans to take the short position in the beginning of the week, currently we have some difficulties with that as market stands so indecision and nervous as it's preparing to the major events of this week, that it starts generating the opposite scenarios, which makes very difficult to make any decision for trading. And to conservative traders, I probably would say that it would be better to not be involved in the current trading, wait for clarity with the patterns that are forming here. For active traders who are still intent to trade, you should understand that currently this is not the question of the technical analysis, whether it's wrong or correct. It's just because of the big part of the gambling right now stands in any decision that you could make. Because whatever strong patterns you have on the technical side, if Jerome Powell will tell something, these technical patterns will be erased in the blink of an eye. And it mostly depends on external factors. So if you feel comfortable with trading with that, and I do know people who are, like to trade in the current environment. This is a bit specific for mentality of the different persons. So that's definitely the time of the big opportunities currently. So what we have on the gold? First of all, on the euro currency today, we also have got the bullish grabber that put under question the bearish scenario that we have. Second, recall what we discussed in our weekly report on the gold. Not on the technical side, but first recall what we said about the sentiment. The Commitment of Traders report shows the big jump in open interest in the gold market, more than the 10%. So it's a really very big add-on to the overall position on the market. As a result, the net long position have been boosted on the gold market, and it seems it could mean a couple of things. First is markets either know something, preparing to something, so maybe some rumors stand in the market. Personally, I do not know about that, but it's suggesting some comments from the Jerome Powell or some events should be released or something of that sort. But it is too significant change in the sentiment just to call it as occasional change. It's definitely something is going on. Second, on the technical side, we said, well, it's unclear because here we have the grabber on the gold futures. We do not have the grabber, but currently all questions are disappeared. Yesterday, we really have got the bullish grabber here. As a result, today, if market will close here or above this area, we could get another one. And all of these grabbers suggest the taking out of the previous top. So market should jump above the 1815 area, it's trying to move higher. So maybe it will reach the opposite border around 1830 of the big consolidation and resistance line that we already talked about, also mostly weekly resistance that we have here. So what we're going to do in the current environment, whether we should ignore the bearish context, focus on the bullish context, or do nothing, what it would be better to do. Well, as I said, if you are not have enough skills to show the big reaction and feel like the fish in the water with this tricky environment, you prefer the calm situation for trading, it would be better to not take any position currently. Just wait for clarity when some action will happen, you see the clear signs of the failure one of these scenarios. If you're, as I said, would like to trade here, what we could do in the current circumstance. First, let's talk about bearish position, because this scenario we discussed in our weekly report. Based on the bearish setup, market has done the preliminary stage that we intend to see. We said wait for a pullback, preferably if market will, or at least it's possible, this market will stop somewhere around 1785 because this lower bar of this consolidation, it's also confidence resistance was on hourly chart if you remember. If not, then wait for a kiss goodbye on the trend line, retesting on the 18 even area, and that potentially will be the culmination point for a bearish scenario. It provides simultaneously the invalidation point here and best risk-reward ratio. So if you take in position around 18 even, you could place very tight stop. It doesn't guarantee you that you succeed, but it does guarantee you that you will have the minimum possible stop, a near standing stop, and your risk-reward will be maximum if market starts action according with this trading plan. If indeed market will start dropping here, it means that if you still would like to consider taking the short position and you would like to trade it, you need to take a look at the hourly chart. Here we have actually market stands in place. This barely hasn't reached the targets, probably it will happen a bit later. But anyway, in general, market already stands at the point where you should think about the decision and taking about the position. So we have to the upside this trend line, as I said, minor ABCD pattern of the retracement, XOP 1798, major level 1797, 75, it's agreement. And if you build another extension, these lines A, B, C, bottom, D, OP, it also stands in the same area. So it's two different extensions. So that's the point where market should turn down if it is bearish. So correspondingly, for position taking, you do not need to hide your stop somewhere above this area. You need to place relatively tight stop, maybe slightly above this level. Since the overall situation stands really tricky, once you will take it, if you would like to take the short position, here definitely some bounce probably happens. So it's the level relatively strong, and some respect probably could happen, at least technical. Once it will happen, try to move your stops to the break-even, because if market the bullish instead, this pullback will be small and market returns that back up to the protection, break it out. So to not get the loss, once market starts responding to this area and respect this resistance, move stops to the break-even. That's the solution that you probably should make to protect your position if you'd like to go short. That's what about the bearish context. For the bullish context, it's much simpler. So we have the upward action, which is actually few bullish grabbers here. That's invalidation point. If you'd like to take the position, you probably should consider some retracement. Maybe, by the way, the respect of this level will trigger some pullback. You could consider taking position on this pullback, just to minimize your potential loss to the lows. So, but in the terms of the daily chart, well, if you have enough funds and this is not the big distance to you, well, you could consider just taking the position with the stops below these lows. That's what we have currently in the situation. So hopefully you understand the overall trickiness that we have in the market currently. And well, think twice before entering and trading in this tough market. Also, guys, finally, and you could take a look at the interest rates as well. Here, we do not see any clear patterns or setups that could tell something, but with these long tails, well, slightly hints that maybe indeed market could drop a bit more and reach the major support area on a 10-year yield. At least currently, well, we do not see signs of some reversal or something of that sort on interest rates as well. So let's keep watching and see what we get on the gold, because the situation becomes really very interesting.